I might give myself a rest day today. I have not. I've hit the gym every single day.
Are we live?
Okay. I might give myself a rest day today. I have not. I've hit.
Cool. Yo, 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 what's good? What's good? Happy Wednesday, man. We back, man. Wednesday review. So on Wednesdays, Texas Heist, we're gonna come on here and give you guys the best setups that we've taken so far. Then if we haven't taken any setups so far, we're gonna talk about, the next potential heist that we're looking to execute, okay? All right, cool. So who wants to go first, man? Casey, man, show us something, man. You've been killing it, man. You've been killing it.
All right. So I mean, I can go first. This has gonna bear with me a little bit because like I said, I was dealing with some dog stuff, but I got. Let me share my screen here. And this one's gonna be a very try to be as thorough as possible with a breakdown. We're missing one. Okay, no. Okay, okay. Ed, you gonna call?
Yeah, of course.
Okay, this says Zoom user. That's why I was so confused. I'm like, what's going on? Okay, no worries. Let me share my screen here. I need to do this stuff. Yeah. Share. There you go. That took me a while to see that screen too. Yeah, so okay. So I'm gonna share my screen. I don't know if you guys can see it. Can I see my screen or no?
Yep,
Yeah.
yep.
Okay. Let me just see if this even shows the execution. This one's on my other account, my demo account here. So I'll see if it even shows. I know I executed here. I actually have the video, funny enough. So I'm gonna compile that and actually put the video on YouTube as well. But let me see if it even shows some of the executions I took here. And then we're gonna get into the trade of the it is on NASDAQ. So, anyways, NASDAQ, I took these buys here. This is not really the trade of the week for me, but nice little buys from here to here. And then the chat, if you're in the Texas Heist channel, I was mentioning how price NASDAQ's gonna dump. I was looking for dumps, price of the daily level. I mean, this honestly could be the trade of the week as well because everything was predicted. But the thing is, NASDAQ moved a little bit slower initially than S&P, so I actually traded S&P sells. So I'm gonna talk about that. I think that's all I want to talk about. Even though NASDAQ to me had the clean setup. Let me just go to S&P for a second and see if I want to cover because that's the trade I actually took with
Okay,
S&P.
there we go. Because I was gonna say, man, no, don't take Nasdaq from me.
Okay, I got you. So this is ES. I'll do ES. That's cool. So we're gonna start from the top to the bottom. So there's a lot on my charts right now. Some of these levels you not understand unless you're following along, and slowly but surely you will get the sauce. So let's just break down the trade of the week. So when we start the week, right, we had two levels in place. This yellow level, which is a C4, right, or order block, and we had this fair value gap. So those two levels existed. So throughout the week, I'm really thinking, how are we going to trade between those two levels? It might be a little ping pong. So just keep that in mind. C4 and then these levels here below. Let's go on daily chart. The daily chart. We know Friday had a crazy day. We had a big drop in price, taking out this liquidity. And so far, we've retraced. As we retrace, though, we trade into this daily fair value gap. And also, if you look closer, this is a daily order block. And notice how price hits that to the T and repels. That's one of the other catalysts to the trade is the fact that we have this nice little drop here, which breaks structure, creates a nice little loot zone on our fair value gap right here. And also, it's also permitted to trade to the order block. So the change in delivery, the opening of this price, of this candle, price trades that to the T, and it repels. Okay, so that was the catalyst is where we were trading in a premium. And also if you draw your fib from high to low, right? Everything above 50% of this range is determined premium. You want to be selling. So we were in a premium. And notice how also this 75% level matches right where this fair value gap is. So it made sense for price to act to have some reaction there. 4-hour chart. Okay, 4-hour chart. Another catalyst was this level here. If we are to trade above this, I'm only going to turn bullish on S&P, right? Um, I'm only going to turn bullish on the S&P if we are to trade above this level. So the fact that price traded here and then closed, and now this 10 o'clock candle started. So from 10 o'clock, the next after 4 hours, is gonna put out what 13 o'clock. So I'm ready to look at this candle and I'm anticipating it not to want to close above here, above that 4-hour level. If it does, cool, but I'm anticipating not to do so. So I'm just highly bearish on this one, or just going into the session. Watch how price has traded its way from this low all the way up in here, right? To now it's in the premium. And it's also this candle, 9 o'clock candle, or the 6 a.m. 4-hour candle, do not have the ability to trade outside of the 4-hour loot zone, which is again the one here. So this turns to a what inverse loot zone. So again, price trades in there. This candle opens. Let's go to 1-hour chart. 1-hour chart, nothing really spectacular to call out there. 15-minute chart. Now, what was the catalyst for me actually pressing the button on this one? If you look closely here, we did trade into what that daily level. See that right here? Look how it hits that to the T. All right, then still want to be patient, even though price has ran up higher. And mind you, 9:30 started here. So 9:30 runs up higher. What are most retail traders thinking? Well, this thing's gonna keep going higher, right? Now they want to be buyers of this stuff. So price trades higher. Where's midnight opening? Here. So we're above, at this point up here, we're above midnight open price. We're also above 9:30 opening price. Even if I'm bullish, I do not want to be buying that. I'm looking for reasons to be short. And then add in all the other context, the fact that we're hitting higher time frame levels and we're stopping there to the T. We're not able to go above the 4-hour level. Perfect. I've also waited for 30 minutes to pass by from 9:30 opening price to 10 o'clock. After 10 o'clock, the market is more smoother because the market participants that step in at 9:30, everyone's trying to make something happen. Everyone's trying to rush in the trade. Everyone's trying to put on a position. When the market goes one way, retail chases it. But when you slow down, that 30 minutes pass by, and now we're at 10 o'clock. So after that, I'm looking at what fair value gaps are in place. At 10 o'clock, what do we have at this level here? So once price trades beyond that and closes, that confirmed me being bearish. And also we had US 30 already slowly drifting lower. Again, all this was called in the chat, especially NASDAQ specifically, which I know liquid extractions break down, but the sell-off was expected. So it hits here, boom, then you see how price is reacting within this level, right? It has an up close candle and then sell. So it balanced out this range, trades a little bit higher into what? This order block here, or C4 on the 5-minute chart. These are all the fine details that matter. So trades into that there. Boom, repels as well. Trades beyond this 5-minute level here. You see how this candle trades, stabs back up here, does not even close with the body, and then melts. So I actually exited this trade here. But let's now talk about the trade of the week specifically. So this was the trade I took. And if you look at executions, just for you can see again the entries right there, exiting here, also exiting here. But I'm going to even go into a little bit more details as to why this even traded a little bit more lower. Let's go on a 1-minute time frame for a second. If you go on a 1-minute too, you can see the executions happening here. So there's a fair value gap. I'm just going to bar replay. There's a nice after hitting this what? This 5 minute order block. Remember that? It trades inside. Within that 5 minute order block is a fair value gap. It tags that, repels, creates the what? Another fair value gap, another loot zone. Price trades that, repels, trades back into this loot zone. So that's why I entered here. Stop loss can be above here if you're that very confident, or above here. We were expecting what? A drop off. Price melts, takes out these lows, and there's also some liquidity here. Now, I mentioned that, so that was a trade I took. Now I'm gonna get a little bit deeper into why I even dropped lower. So we have to remember there was a huge move on Friday. So these markets are volatile. It's back to the same times when Trump first started talking about tariffs. So we can expect a lot of volatility. You can look at the markets and tell it's going to be moving more than normal. So on a normal day, moved from here to here is already a lot, but that could be satisfactory, right? This is why we need to stay locked in on these charts. Even with for me today, it was a good trade. I had a good buys, good sells, but if I could have stayed locked just a little bit more, I would have potentially captured even more of the move. But nonetheless, I'm still going to break it down and explain reasons why. So one, we're in a very volatile market, so we should expect deeper price runs. More liquidity is going to be more volatile. So instead of just closing out profits once we hit the first target, we can expect more in these market conditions, right? I'm trying to ingrain that in my mind and your mind as well at this moment. So it's going to be very, very volatile. So expect more. Now, why is it a very simple thing? Why would the markets drop as low as it did, right? Let me sure you could tell. It says RTH vault. This was a regular trading hour vault. So as much as there was some lows here, like the real liquidity pool is really resting here. And let's look at how it looks at regular trading hours for a second. Look at that. Boom. So all the liquidity was, yes, it's there, but almost superficial, right? Because at the end of the day, 9:30, right, retail traders, those that have options in or whatever it might be, they're looking at these charts as well. And all they see is that price, yesterday's lows in place, and we had a gap up. So what will a trader do? Some might say, well, it might drop lower and then fill in midpoint of the gap and then go higher. So they have their stop loss here. So there's a lot of liquidity, a lot of reason for them to come down and take this specific low out. So that's why this right here was the actual target. Once we hit that, boom, we can see reversal. So all this dropping here, there was not any reason to really like fully exit. Yes, there was some, exit points on the electronic trading hours. There were still good exits in my opinion, but the bigger move was really targeting this low. And you can see how much of a range that would have been, or that is from here to here. That's like 87, you want to call it ticks points on the S&P in one day. So we're in a very, very different markets here. And then I'm just gonna add one more thing. Look at electronic hours. You see this fair value gap here? Look what happens when price closes below that. And trades in there creates a high. We have this nice little sink. And again, I just was on the charts after this, but if you look closely, it was so easy. If you look at a 1 minute chart, look at the way it broke down. Look at the way it broke down. So trade it, boom, higher, take out this pool of liquidity, drops lower, trades back in here, drops lower. The nice entry to me was right here. Once it peels off here, drawing this little loop zone here. So even if I exit the position, I could have still added more right here comfortably. If I just stayed a little bit locked in on the charts. That's why it's important in this market environment, stay locked on charts. So this could have been another trade right here, boom, all the way to regular trading hours. And that would have been still a nice. Look at that, 15 points. Let's pretty stop loss above here. Let's call it 10 points, whatever. All those regular trading hours. That's still like a nice 1 to 5 after the initial trade that we took. And the reason why this level is even more significant is it's also coming off of a daily fair value gap level here, or daily loop zone. Again, back to the daily chart. It is this whole shade area here. So the low of that is right here. That's what price is trading off of to also then sink lower. So these markets overall, I mean, they delivered. So if you had the ability to hold, which I really could have, but let's say from up here all the way down here, this is again about 80 points with one contract 80 times 50 is 4,000. Two contrast 8,000. So these markets are moving. It's time to focus, lock in, and stay precise. So that's the trade setup I had for the week. That's that. I guess I can pass that over to ignore this. Sorry,
Five,
guys.
five, five.
I'll take it. I ain't tripping. I'm trying to get it out the way.
Let's get it. A
Hey,
local.
you share, that's how you share your screen.
Yeah, I'm trying to stop sharing my screen. How do I do that? And what do you guys think about that breakdown, by the way? I guess just 1 minute or 30 seconds for like thoughts there.
Yeah, no, I think that was actually pretty solid, bro. A lot of the same things that you spoke about happened with Nasdaq, bro. So like it was a lot of similarities in the market today. That's what really made everything strong. A lot of conviction.
Lots. And then
S-
US3 was and US3 was ahead too.
yeah, S&P, Nasdaq, and US 30 were all in correlation today. So usually when that happens, it's something big happens. Something
Yes.
big happens.
Still
Um,
share
can y'all see
screen.
my screen?
I'm trying to stop sharing. Okay, finally. It's so weird. I'm out the way now. Yeah, you good.
Y'all can see mine now.
Yeah.
Yes, sir.
Okay, so basically,
Edric, move the zoom thing to the right.
basically, um, since we're at all-time highs, I take my time with longing because I'm more inclined to short, but at the same time, at all-time highs is real. It's real icky. So even trying to short can can mess you up. So you have to be real patient. But since we're at all-time highs, I'm more probable for a short. Me looking at the chart, as we can see, we're at a constant trend upward. Whether we have a nice correction or a consolidation, this is still considered an upward trend. Me, I'm anticipating price to do the complete opposite because I'm looking for the most logical move, quote unquote. So as we traded up from London session, which this is basically where London session opened, right about here. When we traded up from London session, there was no aggressive retest or any sort of liquidation overnight. We were just at a slow and steady pace, just moving upward. So me knowing that New York is when liquidity comes in heavy, I'm looking for some sort of sign that price is either going to reverse or continue. And normally you wouldn't trade an opening, but if you're watching price from let's say 4, 5, 6 a.m., then you kind of already know what price wants to do because you're already familiar with the movements that's happening in front of you. So as I'm watching London trade up, knowing that New York is coming, and I know they like to trade sellers and buyers. I mark out my areas of liquidity that actually makes sense to me. And in that sense, there actually would be no liquidity to the top side because it had technically already got got taken out. It already got snatched. It was already liquidated, and we actually had no reason for us to go any higher. I mean, not any higher, any lower. So with these lows in place, the lows were swept before the highs. So that would indicate usually that we would continue higher because whatever happens, we would expect the opposite to happen. So if the lows get swept, we would expect the reverse continue higher. If you're going higher, we would expect the reverse continue lower, so on and so forth. But these markets are a little different. So as we do continue higher, I notice price starts to consolidate. And it doesn't know exactly where it wants to go. So it just kind of consolidates. And this is getting closer and closer to 9:30 New York opening when I know price is going to be the most aggressive. So once again, I'm looking for some sort of sign. And this is just the first trade that gave me my initial confidence to take what KC was going to say would be the potential trade of the week, would be the next one that I'll continue to go over. And basically, as we come into opening, I'm noticing how we're trading, and we're not trading higher, but we have a sort of what we like to call a magnet for price, and it's attracting price, but at the same time, it's holding price there and not allowing price to go any higher or any lower. In that sense, 8:30 opening would be the magnet to pull price, logically speaking, since we have not traded higher. And on that higher time frame, we also have not had another liquidity sweep to the upside or inducement to the upside. An inducement is basically a candle closure above the liquidity sweep instead of a wick. That's the difference between an inducement and a liquidity sweep. A candle closure versus a wick. We have not had a candle closure above any sort of liquidity to the upside. So that is a subconscious signal to me that price is getting ready to reverse. So what do? I wait for my signals. My signals are some sort of PD array, a volume imbalance, a loop zone, a C4, something like that, that I can anticipate price to move away from or to another area of influence that I would consider valuable to me. And if I were to put that on my chart, that would be right here. This would be my area of influence for me to want to actually either trade lower or higher. And as you see, as we come into 8:30 opening Central Time, we don't actually disrespect this specific area of influence that I'm referencing to. We trade into it. And also, as we trade into it, if you have a keen eye for price and market structure, you see as we trade into it, you see as we trade into it. Can y'all still hear me?
Yep.
Yes.
Okay. You see, as we trade into it, and we kind of have tricky price action. And in tricky price action, we only look at wicks and candle closures. We don't focus on anything else. Anything else can confuse us. As you see, we trade into that area of influence that I deem valuable, and we don't have any sort of continuation candles. These are bull traps, which we would trap buyers into getting their positions liquidated. And I see this as an entry point for me because this is a sign price is once again going to continue to go in the downward direction. And that's specifically what it did. Now, my target point, that's a conversation to be had because we have two levels of influence. Two levels of influence. The first level is pretty obvious, but it's already gotten tagged. So I wouldn't expect that to be a draw again. I would only expect that to be a pit stop. Your real draw would be where price has not touched. And for me, that area would be right here. We have equal lows. Price could still go down here and liquidate price and still be considered bullish because we're at all-time highs. That's still a logical, valid move from price because price has not went down here and collected any sort of money from any buyers. So price trades down, and it trades down actually pretty aggressive. But like I said before I stated all of this, we're at all-time highs. So in these positions in markets, you would want to take profit very quickly as to shorting at all-time highs. And I'm pretty sure both of y'all can agree with me, KC and Valentine. Shorting at all-time highs is very, very risky. It's very risky.
Yeah.
Because price can reverse on you at any time, at any PD array. You could get stopped out at price. But this was just a pit stop. So the real move was still bullish. Like I said, we're at all-time highs. We have not had any real sort of manipulation or distribution of price for anything to switch bullish. For it to switch bearish, we would have needed price to trade down here and potentially lower and retest, et cetera, et cetera. And we're going to get to that later. So as I do, I close this trade aiming at this equal lows, these liquidity levels. Price immediately rebalanced. And in a rebalance, I'm not hasty to try to catch highs or lows. It'll more so make me just pay attention and let price give me some more signals. And in that same timing, same issue, I'm also watching these other markets and seeing how these other markets are reacting to news and market structure. And as we can all agree, as we said earlier, everything was moving downward. So in my opinion, it would be it would behoove me to sit on my hands and wait for something that would favor the downside more than the upside, because we've already traded higher and I didn't catch that move. So I would potentially be FOMOing into a move that's already happened. So I just need to sit back and be patient and let some sort of liquidation or entry model present itself that would give me somewhere to target for me to enter at. And we really didn't have any sort of movement for about an hour and a half. But in that hour and a half, we also have signals that kind of tell us when price wants to move. And we would base that off accumulation, manipulation, and distribution, which is a whole nother model that we can go into. If you come to the boot camp, then you can learn more about accumulation, manipulation, and distribution. But basically, it's a three-stage event in which all three stages happened. We had the manipulation, we had the accumulation, and the distribution was the third part that I happened to time. Notice how I said time. In these markets, there are specific times you want to be available to be able to catch specific moves. Now, granted, this is an aggressive move because price technically was not supposed to do this. Logically speaking, like the first trade, price could do this. These are what we call extremities. Especially on the smaller time frame, these are definitely extremities because your risk to reward is way higher than usual and the trade is way more aggressive. But if you can read price and price becomes your best friend, then these kind of things you can anticipate. And you could just press buttons and go on about your day and just let it do what it do. If it hits it, it hits it. If it doesn't, it doesn't. But the risk to reward is enough for you to comfortably close your eyes and know that I'm either gonna make this amount of money and not worried about my loss, or the amount that I lose is not enough for me to even be worried about my loss. So either or, it doesn't matter. You're gonna take the best trade possible. So basically, as we see this current flush up, we have areas of imbalances that price needs to fill. And typically, I don't necessarily look for the midpoints in all imbalances. I only look for important imbalances, things that are important to me that stand out. And those things would be the highest, most extreme point, which would be here, and the lowest, most extreme imbalance, which would be here. And above and below those imbalances, I would either look for a target or entry. And in this case, I'm looking for an entry because I already have my target. My target would be the first presented because at this point in time up here, this hadn't been filled yet. And logically speaking, before price goes any higher, price has to fill all imbalances. So the only logical imbalance would be the most extreme imbalance to the low. And as we have no volume and all we have is bull traps up here, which I would consider liquidations, my logical thinking would tell me, okay, Edric, you're trading. Where are the entries at and where are the stops at? Where did they enter at? Where did they double down at? And if they did, what would be the most enticing areas for the most basic people to enter? And I'm looking at those areas, which would be a bounce that retail traders would say it would be a bounce right here, or some sort of rejection under here, under this area, in which that's where I would consider all the money to be. So that would be my target. So I would hypothetically watch and wait. But in this situation, I actually took action and I entered as aggressive as I could to minimize my risk, because in these markets I don't like risking more than 20 to 30 points. Really 20 points is my comfortable spot. Anything else I get the itching and scratching. I get the tripping. So I like to stick with 20 points. And 20 points with a nice risk to reward, 20 points can get you a bunch of different places. 20 points is only $200 or $2,000. This is not a lot. Granted, you have mitigated risk to reward. So my trade played out basically, it flushed all the way down, swept all liquidity, and I did not catch the whole move. I actually only caught 50% of the move. But logically speaking, once again, I don't need to catch a whole piece of the pie. I can take a slice and I'm cool. With my risk management and my reward, this is a great trade for me because of my calculations. Now, to some people, it might not be a great trade because they missed out. But I'm content with how I trade and what I make in the markets because it keeps my mind clear and it keeps me from doing dumb things. You know what I'm saying? So that's my trade of the day, bro. Trade of the week.
It's beautiful.
Solid, man. Good stuff there. Good stuff. Solid for real.
Yes, sir. Yes, sir.
I break down.
How y'all feel about that, man? Give me some feedback, man.
That was a good
No,
break.
bro. That was a gorgeous trade, bro. Damn. I'm looking at as you were breaking down Nasdaq, I looked at 30. It was clean. Those cells were clean.
It was.
Those cells were
Mind you,
clean.
everything was called beforehand in the Texas Heights. So if you're not in the Texas Heights group chat, you should be in it. Everything was called beforehand. It was a crazy, crazy drop on Nasdaq, but it was anticipated. It was truly anticipated. Everything's there. The history's there. Nothing was deleted. Nothing did it. It's clear as
Yeah,
day.
nothing is guessing. It's different when you have an actual relationship with the markets. You have some sort of sentimental emotion towards how the market reacts to every little candlestick. You can literally feel it in your heart. You can your heart beats to the market. And certain times we don't even have to look at charts. We can just the chart just gives us the information it needs to give us. You don't assume anything. There's no point. Everything you need is right there in front of you. You just have to be able to accept it.
Solid, solid, solid. All right, cool. So I'm gonna go ahead and break down gold. I had a nice buy this morning. Before I break that down, I'm gonna take y'all back to yesterday's price action because the same price action that happened on Monday is the same price action I used to get into my trade. So on the 4 hour, so obviously gold is it's a bull market. You don't try and sell this thing whatsoever, okay? But when as prices keep going high, we finally had this 4 hour, this bearish candle. So this was giving us a potential that price can do a little retracement and offer more buy opportunities. So with this 4 hour load zone right here, from this candle's high to this candle's low, you draw that out. You see how we come in, hit this 4 hour load zone before finally going up. Now going down to the smaller time frame, on the 15 minute. So for 4 hour key level, you want to look at the 15 minute and start analyzing price action. We can see we had this internal low right here, and price goes ahead and sweeps that. So whenever price is coming to a low, you want to ask yourself two things. Is price closing beneath this low with a nice thick candle, or is price simply just rejecting it? And clearly you can see that price is rejecting, okay? So right here we get a flashbang, okay? Once we have that flashbang and price pushes up, price is now respecting this 4 hour loop zone, okay? Now some things that I like to now trade the higher low, or I call it the failure swing of a flashbang, okay? So when price takes out this low and makes this low and goes high, this is simple market structure. Now price is now made a lower high, okay? This area right here is now a lower high. So when the price is not going down, one or two things are going to happen. Price is either going to take out this low and make a lower low, or price is going to fail and create a higher low to now keep going back up. And that's what this structure is right here. This is that higher low or failure swing, okay? So now, okay, now, so cool. Now coming to today's price action, okay, kind of the same thing. So on the 4 hour, we actually had this massive 4 hour loot zone. Okay. Kind of the same thing. And then on the hour right here, we have this a 1 hour point of interest. And I use this because this is basically just simple retail. This acted as resistance. So once we finally close above it, this is just resistance turning support, or you can look at this as a 1 hour C4. These last two downward closed candles. Once we close above that, this area should now act as support for price to go higher. So within that, I'm gonna delete this for our loot zone. You guys get the point for our loot zone. But within that, once again, we have an internal area of liquidity that price is taken out, right? And that internal liquidity is sitting right above that 4-hour loot zone. Okay, so same thing as price action on Monday. 4-hour loot zone, we have this internal liquidity. Price takes it out. Is it closing beneath it? No, it's rejecting it. Price is not going to push up. If you miss this, don't have FOMO and try and buy up here. Simple market structure. When price makes that low, low to high, and you want to buy below 50%, price hits optimal trade entry. You see the 15-minute closing bullish, and then it starts going. So same thing. Low, price takes that out, a massive wick. Don't have FOMO and try and buy here. So now on the smaller time frame, or really on the 1 minute, let me do a replay. Bar replay. Okay. So now within here, coming into New York session, I really start analyzing price around like 6 a.m. Okay, so 6 a.m. So from right here, once price makes that low, once again, don't have FOMO, go ahead and grab your fib. And once again, once price creates that high and price starts dropping, making that lower high, go ahead and grab your fib. And you want to be buying below the 50%. That is below discount. Okay. So now once price came down here and started failing, pay close attention to this 1-hour loot zone over here. Look at how this 1 hour, no, not 1 hour, this 1 minute loot zone right here. Look at how price uses that to go lower. Okay. So now once we finally close above that, okay, this will now act as an inverse loot zone. Okay. So my first entry that I had on here, I went ahead and put a limit right here. My stop loss was here at first, but then I moved it down here, just trying to practice putting stop loss beneath structure. And from there, we now have all this built up buy side liquidity. Okay, so anyone that's short in here, once price drops and price comes back, anyone that is short within this area, they're putting their stop loss above this high. Okay. So that right there was the first vault. And then eventually, because gold is bullish on the higher time frame, and I'm expecting it to make a higher high after hitting this forward key level, after doing a massive retracement, this right here will be TP number 2. So once price inverse that, we see how now price is using this as support. I then went ahead and got a second entry somewhere in this area over here with my stop loss down here. And now this was my second entry. Okay. Well, let's just keep the first entry based off that 1 minute loot zone being inverse. Stop loss down here, and then aiming for the first low hanging fruit of liquidity, which is this internal liquidity before we get to the external liquidity. So price did dance a lot before finally going, but once again, stop loss beneath structure, and you'll be fine. So from right here, once this was now hit, I went ahead and took 70% off. And whenever I take partials, I always just go ahead and set that break even. Okay. So now we'll see that later on, price eventually comes back and takes me out of that break even runner right there. So I get stopped out. But you can see that even if I had just left the original position and the stop loss, price is still valid. Price still never hit this. Price just came back to take liquidity one more time, doing another flashbang. before finally running up again to now go take out this high that it made right here. Okay. So still bullish on gold. I see these highs getting taken out and price making a higher high. Price probably just needs to right now in this 15 minute, we have this 15-minute loot zone and we have this internal liquidity. So we can see if price wants to take this out, poke in here, and then show some bullish price action and keep going higher. But that was gold, man. Gold has been even just from this Monday. I think all the a lot of volume is in gold right now, especially when the government shut down. Gold is looked at as a safe haven. So gold has been honestly just offering lots of buys, some life-changing moves, honestly. So yeah, that was gold, man. Clean, 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 clean. I think that does it. What y'all think of that breakdown, man?
Solid work, man.
Yeah, I think that was clean. Gold is just, man, that thing's never stopping. It's like a one-way train.
One way, bro. It's insane. It's insane. But not cool. So hope y'all found that insightful. Once again, we're calling these trades in the chat. I also called gold in the chat as well. It's a free community. If you're looking for like-minded, traders, like-minded hustlers, the Texas Heist is where you want to be. We will be having a boot camp very soon within the next upcoming week or 2 weeks. So be on the lookout for that. Once again, if you want to get information for that, go ahead and go to the Texas Heist on IG. We have a link in our bio. Go ahead and fill out that form. After you fill out the form, you will get an email with the Discord invite link. Go ahead and click it, join. We have a free beginners course once you join, and we have an advanced course coming out shortly after the boot camp has taken place. Okay. Casey, Liquid Extractions, y'all want to add anything?
Nah,
No,
man, I think you said it all, brother. Said it
yeah,
all.
bro. You be getting it, bro. You be hitting it on the nail, bro.
All right, solid, man. All right, man. We'll catch y'all tomorrow, man. And then also on Saturday on IG, we go on IG Live, and well, no, I think we're doing it on Twitter Space now, right?
That's
Yeah,
spaces.
yeah,
Yeah.
yeah. We're doing it on Spaces now, where we have psychology talks, biggest lesson learned for the week. So tune in on Saturday as well. And once again, you can find us on Twitter X at the Texas Heist.
Yes, sir.
Oh man, all right, man. I'll talk to y'all later.
All right, fellas.